Hey guys, this is the market update. In this video, we're going to look at how Bitcoin is going to react to the next 6 months. It's a really pivotal time right now for Bitcoin and the markets in general. Next week, this is so important, the CPI figure that comes out on the 12th of December, as you can see here. We're going to be trading pretty much sideways into this. It's a massive figure. A lot of people are saying, what else is to come? Now, as you can see for Bitcoin, we're still in a downtrend. Absolutely. We are below the 50, 200, and 100 period moving averages. But you're definitely seeing the angle of this downtrend potentially subside a little bit. And that is because of a few reasons, which I'll get into. We've got some good data here as well. But also, I want to just look at the kind of next few years for what is going to happen with Bitcoin and crypto as well. So for right now, 17,000, we're just going to trade sideways into this CPI figure, which I believe will come in a little bit soft, but the market has priced that in already. So there's definitely some danger here. Inflation is going to be coming down pretty quick. It's still extremely elevated. The difficult thing to know going into next year is it going to stay just too high for the Fed, right? If they want 2% inflation and it kind of stops at like 2.8 or 2.7, is that okay? Or are they actually just going to say, no, we're going to destroy the economy, which is obviously not great for BTC, right? So from a market's perspective, everything is getting way softer, and I'll show you that data. But over the next 6 months, you've got a potential of some sort of recession. Is it large? Is it small? A recession is not positive for Bitcoin, right? Bitcoin being a financial index, it indexes the health of the finances of the people that use it to store and spend value. During a recession, people's finances aren't healthy, right? So not bullish for Bitcoin, but certainly from a market's perspective, financial conditions are easing and starting to price in easier conditions, which from a market's perspective is going to give a little bit more relief to BTC. So I'll go through that now. If you are a trader, up to $4,000 as a deposit bonus on Bybit, check the link in the description. If you're an investor, they're giving 0 commission spot trading right now, so you can buy your cryptos and then take them out to your spot wallet. Link in description for that. Everyone is still worried about inflation, right? Inflation has to come down. It's still way too high. So let's look at the main constituents of inflation and what's going to happen next week. One of the main issues for inflation during the pandemic was used cars. As you can see here, it's absolutely fallen off a cliff. So the worries now, what the market is saying is like, whoa, inflation's coming down so fast, like all of these forward-looking indicators, right? All of these forward-looking indicators are showing such a devastation in demand that actually we're even more worried because of potential deflation and, a large recession. And so at some point, central banks are going to have to identify and grapple with this as well. At the moment, they're still going to talk about how inflation is too high. But what you're seeing, right, from other countries, other central banks, not just the States, is you're seeing central banks raising rates right now and telling the market, hey, you know what? We might be done. We actually might be done at this point. And what they say is data dependent, right? What they're saying is we probably think that we have sparked a recession and we probably don't need to do more. But they obviously can't say that because they don't know. None of us know. You have to see that data come out. But all of the forward-looking stuff is showing potentially that there's going to be a massive crash in demand. And you have to stop that crash before it turns into a larger recession if you want Bitcoin and the stock market not to crash further, right? So car index way down, 13-month low. We also have this, which is the fastest housing slowdown on record ever. And that's worrying. Now, you might have also seen headlines about one of Blackstone's REIT products having lots of clients that wanted to get out and liquidate their holdings. Now, that's difficult when you hold a REIT because it's a real estate investment trust. You can't just liquidate houses if there's no bids, as this line shows. No bids for property. This is a big issue. It's the largest asset class in the world. And if it goes no bid, people are starting to worry about potential contagion more. So there's a lot of risks with trying to stop all demand within the economy. And so what we'll see as well, as you can see right here, this is the rental index. This is showing huge deflation as well. Now, this is back to 2018. So you can see cyclically around winter, around this time of the year, the rent index does actually pop negative. So that's totally normal. But you can see the extent to which it's negative now is much larger than at any period over the recent history, and certainly larger year over year from 2021. And so when you're looking at inflation with year over year comparables, what you're seeing is a massive decline in the rental index. Now, the rents and housing is one of the largest constituents of CPI and inflation. And so again, we're not seeing any inflationary stuff. It just has to work its way through to CPI, which is all lagging. As Charlie is saying here as well, the last time that the Fed funds rate was up at this level, around 4.25 to 5 was December 2007. And that was the largest housing and financial crisis we've ever seen, right? So very different this time, because banks are extremely well capitalized and regulated now. And so, a lot of people are fearing a kind of, take two for 2008, which doesn't seem like it's happening. There's a lot of uncertainty with a lot of the ETF products that have been built in terms of, are the prices of those products actually real, right? Like, are there mark-to-market prices actually real when you get a bunch of people saying, I want my money out now? Well, we've learned that that's not the case, because Blackstone, I think it was Blackstone and not BlackRock, but it was Blackstone, their most popular REIT product, saying, you can't take your money out. Sorry, but there's no liquidity, and so you have to keep your money in. That's an issue, and so that's really worrying. And that's why Bitcoin exists. Because if I want to take my money out, or if I want to send my money anywhere, I can do it instantly, and Bitcoin can't tell me what to do. And that is why Bitcoin exists, and that is why I support Bitcoin. What we can see here as well is that financial conditions are starting to ease a lot. And again, this is the market worrying about recession and big slowdowns in the economy. So as of September, you can see the market was completely delusional about where rates were going to get to, pricing in 3.5%. Now, fast forward to November, and you can see they potentially overcorrected when the Fed was like ultra hawkish, saying, we're going to raise rates, we're going to smash the economy. And it started pricing in interest rates up to 5%. You can see that's come way down now to more like 4.75, something like that. The official Fed funds rate is going to get to 4.5, 50 basis points in December, 25 basis points in Jan-Feb, which takes it up to 4.5 officially. And you can see that the market is now pricing in a massive cut to rates, this purple line here, mid next year, much more than it has been. The market itself, the treasuries market and the private markets pricing all of this stuff in, is getting more and more and more worried about an actual recession and a massive slowdown in growth. And so we could be seeing the narrative shift a lot next year in terms of actually supporting growth instead of trying to tame inflation. Now, that's okay for Bitcoin, of course. The lower rates are, the more stimulus that happens, Bitcoin's going to get priced very well compared to dollars. However, that 6 months period may be a very tough time for risk assets and Bitcoin as well, where it's trying to price in potential recessions as well. So there's a lot of difficulty over the next 6 months. It really depends who you are as an investor as to how you want to play that. Long-term investors licking their lips. Short-term, probably not best to go 10x leverage long on a Bitcoin trade, but there are opportunities, of course. If we look at the on-chain stuff and how Bitcoin is reacting to all of this situation, which is probably the worst economic situation it's faced, it looks more or less like a kind of normal drawdown right here. So as we can see during this bear market, we have a drawdown that is about in line with the other major drawdowns in Bitcoin's history. So, nothing majorly bigger than what we've seen in previous drawdowns. As we can see here as well, anytime that the price gets to this red zone, has been seen as a massive buying opportunity. We're here now again, but this is on-chain stuff. This is 6 to 12 month time frame stuff in terms of investment, making investments, right? So it can stay in the red zone for a very long time, and it may not come out of the red zone for a very long time, as you can see. So this is really more for long-term investors right here. As we can see, market value to realized value, again, you're in this zone, right, of huge drawdown and buying opportunity for long-term investors. So 215 days here, 384, 134, and then 176 days. So, we could come out of it very quickly, or we could stay in this for twice as long. It really, it depends on what's happening with the economy. But for long-term investors, when they're looking to get way more active dollar cost averaging, this is obviously the area, given that they presume that the general growth of this network will continue over the next 10, 20 years. There is no doubt that Bitcoin and a few crypto platforms are going to do extremely well over the next 20 years. All of finance is moving to this. Proof is BlackRack themselves, who are getting very involved. I'll leave this video linked in the description. There's a few minutes that are really great here. One where he essentially says that all financial products will be tokenized. All securities will be a token on a blockchain to be traded. Money, in terms of money market funds and fiat currencies, will be tokenized in some way to have instant, international settlement. BlackRock are investing heavily in this. They're an investor in Circle, and they've got other investments as well. So they are going towards this. The world's largest asset manager is saying this technology is something that we're going to use and we're going to move over. So how does that affect cryptocurrencies and which blockchains are going to win here? I think that there are going to be probably a few blockchains that aren't in existence today that will be used. They'll probably be interbank blockchains. There'll be government blockchains, but they are public sector maybe, and obviously private sector blockchains are extremely important as well, like Bitcoin as private money. If CPI comes in light, which I think it might, you want to be looking at something around 18,000 or so, because we've just been rejected off of this moving average every single time so far. And so as you can see, this is definitely somewhere that if you were looking for Bitcoin to actually start rising again, it would have to be breaking through this moving average resistance as well, around 18,000. If you are a trader, get that deposit bonus on Bybit and 0 spot fees as well right now. If you are an investor, you can use that and then take the crypto out to your wallet. Link in description. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.